Hey everyone, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at the top 500 stocks in the US stock market. No, not individually. We're going to be looking at the S&P 500. It's been a while since I have looked at this one with you guys. Let's go ahead and see where the heck we're at. I know we're doing well this year for the S&P 500. Oh yeah, last week this big red candle, the Fed came out and was saying they may not lower rates. It's all a show at this point. Okay, so I drew this a while ago, and look how beautiful it played out. This candle came back and confirmed this line, and it has been green ever since. Absolutely beautiful. The RSI is strong, the momentum is strong, the money flow is strong, the relative momentum is strong. Like, holy freaking cow. This is the top 500 companies, so there's not really a gauge for me to look at how every company's sales and income and revenue, everything, debts, cash on hand are looking. So we're just going to be doing a visual analysis for the S&P 500. And we can open up Thinkorswim to do that. So we're going to go to the monthly chart and we're going to look at SPY or VOO, whatever you prefer. I wonder if I have... I was going to say, I don't know if I have this charted, but I guess I do. Okay. So this purple line is insane because it goes all the way back to 1999. It got tested as recently as 2019. 20 freaking 19. I took the very low of the Great Lockdown I made a Fibonacci arc here from the low to the high at the time, which the S&P 500 was at 477. The S&P dipped to 350, going up to 460, doing a little pullback, and then going to 524. We are heading into some resistance right here. Let me just flatline this out a little bit. All right, so I think we're coming in for a breather here, possibly. We are approaching the Fibonacci arc, and we also have this support line at 484 as well. I think this would be a healthy pullback because this ran from $409 to $524. It's pretty incredible. And I even charted that arrow showing how confident I was in my charting skills, so that's kind of funny. So again, we're going to head into some resistance here, probably April, for sure May. So we might see some sideways consolidation for a minute, but yeah, I mean, this thing is looking strong, stronger than ever. I'm just trying to see what other metrics I could use to see where this is going. I mean, this is so hot temperature wise. I'm just going to add some more lines here. All right. Okay. So I just created another channel. I want to be able to, let's make it this color. All right. So this channel, I want to be able to visually see when it gets in this channel, because if it does breach this channel, like comes and does like a U, I know it's a pretty decent long-term value addition. Like right here, this was the Great Lockdown pandemic. It came and breached out this new channel that I just drew. if the S&P 500 ever gets to this purple line again, oh my god, that would be the opportunity of a lifetime. I am not even joking. When this happened during the Great Lockdown, the low was $218.26. It immediately doubled, came back down, and now it's at 524. So that is the power of this long-term line here. I think the S&P 500 definitely needs to consolidate more over the next few years. However, I know companies are posting really strong earnings. Inflation's getting out of control. The money is printing, leading to extra spending. These corporations have more cash. It's a big cycle. So visually speaking, I think if the S&P 500 continues to be a monster this year, I think we get to 568 to 600. 568 to 600, optimistically, bullishly speaking. Conservatively speaking, I think maybe 511 at the end of the year. If the S&P does consolidate, takes a breather, and rests. It's risen so much, honestly. A lot. So that's just my 2 cents on the S&P 500. I always tell people if they want to get in the stock market, I always just have to say, do the S&P 500, top 500 stocks. I am doing a Robinhood challenge right now where I'm basically swing trading small, mid, large cap stocks. My average right now is like 9% this year. I think last year was like 6 or 7. I would just put it in S&P 500 or VOO. Find a S&P 500 package for you. I like VOO. I'm a Vanguard baby. I've got Vanguard for everything. There is another there's another S&P 500 package that is has a lower expense ratio and does track the top 500. I believe it's Let's see. I don't want to butcher it. SDJ? No, SJ. SDP? No. SPD? No. No, I think it is SPD. No. It's not it. I made a video about it a while ago. I would have to dig it up, but there's another 500 SP 500 index. I would just say do that. Don't try and time the market or trade, whatever. Anyway, that's where I think we're going for the S&P 500. Optimistically speaking, maybe 600 for the SPY, or 511 if we do consolidate and just kind of taper through. But again, I think 600 tops at the end of the year, right here. That's my guess. All right. If you made it this far, consider subscribing. Thank you so much for watching. Hope you're doing well. Adios.